every cycle has a moment where price is broken. Every cycle has periods of sentiment collapses. And most people assume this time is different. But when you zoom out, the structure tells a very, very different story. Today, I'm going to show you why Bitcoin's current drop fits a very historical pattern and why this zone decides whether the next move is potentially violent upside. And also why Ethereum is quietly setting up one of the cleanest higher time frame trade ideas we've seen in a very long time. This is Bitcoin on Point, where we break the market down exactly as it is in real time and emotion free. In this video, you will see a Bitcoin monthly pattern that most people are ignoring, 4 daily Bitcoin scenarios that decide what happens next, and the exact Ethereum structure I'm waiting for before entering a trade. If you've been confused by this market, or if you're emotionally shaken by the volatility, make sure you like the video, subscribe, and share this with anyone who needs structure right now, not noise. And as always, before we go deeper into the charts, we need to talk about what just happened in the background. This is not a normal headline flow today. This is narrative shift. President Trump has just signed an executive order removing capital gains tax on crypto for the whole year. Now, look, regardless of how people might joke about it, right? This matters significantly. It shows intent and it shows positioning at the highest level. Now, Cathie Wood has also recently said live on CNBC that Bitcoin's bottom is in and that the price is preparing for a parabolic move. Cathie isn't a random Twitter account. This is institutional conviction that's being stated publicly. And then there is this. Russia's banking giant Sovcombank just announced they will accept Bitcoin as collateral for loans. Let that one sink in. Bitcoin isn't being treated as a speculative asset here. It's being treated as collateral. So whilst the price on the charts look ugly, emotional, heavy, whatever you want to call it, what's happening behind the scenes is very different. Regulation is moving forward. Institutions are speaking openly and banks are adapting. This doesn't mean price goes up tomorrow or today, but it does mean something important. And that's that the people who matter are positioning whilst most traders are reacting. And that's why we don't trade the headlines. We let the structure and location tell us when to act. Now let's bring all of this back to the charts and see where opportunity actually exists. So let's start from the top. We're looking at the Bitcoin monthly time frame. And this is the chart I want you to remember. Stick it in your minds because historically, whenever QT ends, Bitcoin does not immediately explode higher, right? So when we phase from QT and start looking towards QE and the easing, we typically see a sequence, right? QT ends and then the price pulls back. Sentiment turns bearish. But this is where the real expansion begins. We saw this in 2019. And now in 2026, we're seeing the same behavior replicate again. This pullback isn't random, guys. It's the market resetting leverage. It's shaking confidence. And it's transferring coins from emotional hands to the patient ones. If this pattern continues, this is the type of structure that turns average positioning into life-changing gains, right? And returns. It's not a signal to ignore. And don't get me wrong, I'm not saying buy blindly, but I'm saying understand where we are in the cycle. And to refine that, we now drop into the lower time frame. So let's look at Bitcoin on the daily, where we have our 4 scenarios. And I've marked each of these on the chart, and none of them are random, right? They all historically have some relevance to previous price action. And each one represents real possible demand, and as I said, where price has previously reacted, right? So these scenarios are 69K, which we've lost, scenario 62 at 63K, scenario 3 at 58K, and scenario 4 at 52K. Now, earlier in the move, price did reject multiple times from the same supply zone at 95K before breaking down, right? And that told us exactly where shorts were to make sense. But now, we're not in a shorting environment. The entire 70K to 50K range is a major high time frame demand zone. So this is not where you chase shorts. This is where you observe the reactions. We're back at demand, where bulls like to step in. So right now, scenario 2, which I've got highlighted in green here, is the one that's actively playing out, 63K, right? And what matters here is not the level itself, it's how price behaves inside this territory. And that's why we might even go lower. Now, a quick reminder before we drop into the 4 hour. All my trades are tracked on Profits Precision, and every real-time update happens inside my Telegram. The YouTube is for the daily structure and context, but Telegram is where all my executions happen live. Now, with that in mind, let's look at Bitcoin on the 4 hour. And prices entered a weekly bullish order block. This is very important because higher time frame order blocks do not behave like random support levels. They genuinely absorb selling pressure. They slow momentum down. And then ultimately they often precede sharp reactions, manipulation into distribution. So above us, I've marked 2 major supply zones. The level where price should typically have reversed, right? But it didn't. And the psychological area where narrative fully flipped bearish. Both of them failed. And because of that, now the weekly order block is the first area where higher time frame buyers are statistically active. There is also liquidity resting above. Does that mean the price goes straight up? Not necessarily, no, but it does mean this zone decides whether we see distribution or continuation lower. So Bitcoin looks good here, but my cleanest setup today is actually on Ethereum. And if we zoom into the daily time frame, this is where the trade idea originates. Yeah, we'll zoom in and actually look at it shortly. But Ethereum has been in a continuous controlled sell-off. Not a panic dump, but a structured move lower, similar to Bitcoin. Now, what's important here is how the price is falling. We're not seeing any strong bullish reactions. We're seeing candles consistently opening below the previous close, which tells us that sellers are still in control. But again, the momentum is slowing down. We are seeing less sell pressure. And that's a key sign. Price has now reached into a major weekly bullish order block. And that's a zone that previously acted as a foundation before stronger expansion. So this isn't a random support zone. This is a higher time frame demand area where smart money historically steps in. Now, here's the important part. And this is where most traders actually get it wrong. Not just because price enters a strong order block means that we should go blindly into a long. It doesn't mean that by any means. If this level is truly strong, the price should react and move away from it and then give us a chance to enter on confirmation. So we like to see a run up into resistance on the short term and then a pullback back down into the demand area where we get the chance to enter on that confirmation. So that's exactly what I'm looking for. And Ethereum is showing early signs of that reaction. And now this is where the 4 hour becomes critical because it's where the execution happens. This is where the trade actually lives. Patience is required. Price is already inside our weekly order block, as we discussed, right? Above current price, we do have buy-side liquidity, which is resting above structure. And I've drawn 2 trend lines for a reason here. Once price pushes higher and clears the internal liquidity, this is where I expect the controlled pullback, right? So that pullback, not necessarily the impulse or the breakup, is where the trade exists. And it's where risk initially becomes defined. Structure is going to confirm here if we get it. And probability in this zone shifts in our favor, right? So I'm not entering yet. I'm waiting for the price to do the work. No guessing, no forcing, just simple structure. If it presents itself, we snatch it. Now let's do a quick trading challenge update because this is where my execution matters more than opinions, right? Other than YouTube. And this challenge is simple. We take clean, structure-based trades, manage our risk properly, and stay disciplined, especially in volatile markets like we've seen over the last week. So far, our approach has been working exactly as planned. Every single trade, the 4 that I've taken so far, is tracked on Profits Precision. It's where I log all my entries, exits, multipliers, and my overall performance. No screenshots, no cherry picking anything. Full transparency. Right now, the account is green. And more importantly, the consistency is there. And that's what actually matters long term for a challenge like this. All my executions are done on the week's exchange and everything is shared live in my free Telegram. Head over, the links are in the description. You are missing out if you are not there. So as the market gives more clarity, I'll continue updating everything step by step, live, transparent, and disciplined. If this breakdown helped you stay grounded today, make sure to like the video, smash that button, the alarm bell, and subscribe. It really helps the channel grow. Drop your comments below. Tell me what you're watching next. And most importantly, if you do want to see how I manage it all in real time, just join my free Telegram. Stay patient, stay disciplined. I'll see you in the next update.